banks and other larger financial institutions may be a little more reluctant because it may not be worth their time to deal with small business owners, whereas we only require them to do 100,000. We provide business financing to small businesses through Canada. Our division, OnDeck Canada, focuses solely on Canada. We have 3 different types of financing programs that we can offer small business owners. 1 is a business loan, 2 is a line of credit, and 3 is a program called Flex Funding, which is a very specific factor financing program. And each of them have their specific advantages and disadvantages. At the end of the day, it's nice when a business owner comes looking for a few bucks to help their business to have more than one program, because obviously not one program meets the needs. So to give you kind of a broad stroke on those 3 programs, the business loan is exactly what it sounds like. We give a specific dollar amount, and the repayment by definition of a business loan is a fixed dollar amount. Whether that frequency is daily or weekly, the business owner pays back a fixed dollar amount on the business loan. The line of credit, obviously somebody comes in, gets approved for a specific dollar amount, and depending on what they draw, they'll pay back a specific amount catered to or determined by the amount they draw. And the Flex Fund, which is factor financing based on a business's credit and debit card receivables. So it doesn't take into account their cash sales. So we'll look at what their card sales are. For example, if a restaurant does $100,000 of sales a month, only $75,000 are accepted with Visa and MasterCard or debit cards. We'll only look at that $75,000 and determine what they qualify for in terms of financing. And that's a bit of a unique program because the repayment is different. It's a fixed percentage of their daily, weekly, and monthly card sales. So the advantage to that, which is kind of interesting, is the repayment is flexible and often in line with sales. So obviously, most businesses go through different degrees of seasonality. So it's helpful to have a program where if sales are high, your repayment is a little higher. And when sales are low, the repayment is a little lower. So it's advantageous to the business owner. And so some business owners that are more seasonal than others would go for that option. So those are broad overview of the 3 programs that we currently offer. Should somebody come to us for one of the 3 programs we offer, obviously, if you take a business loan or the Flex Funds financing program, we're giving you the money now. And as soon as we give you the money, you start paying it back right away. So really, you have to have an immediate purpose for that funds that you're taking. Otherwise, there's no point in taking it right now. So if you are a small business owner that may require some financing at some point down the road, or maybe a little uncertain, then a line of credit might make more sense because you can come in and apply for the line of credit now, get approved, but you don't have to use the financing. So if you're not using it, you're not repaying it, so you're not paying for it really, right? Just like the same thing as a tier 1 bank. So you really have 2 different options if you want the money right now, for instance. 3, but if you wanted to take a loan or a Flex Funds program and you prefer the flexible repayment because your sales are cyclical and go up and down depending on the week or the month or the season, then you may pay, the flexible repayment financing with the Flex Funds versus the loan. But outside of our company, ultimately, the reality is, we offer short-term financing in our 3 programs. So the repayment timeline varies between 4 months and 18 months, so that doesn't cover every need out of the market. The reality is small business owners don't only need financing from us. They often go to their bank, obviously, first, So bank financing is often the cheapest type of financing out there. It's inexpensive very often because banks ask for personal collateral for a business owner to put against the business loan. And they do that because if the loan goes south and the business fails to repay it back, they are ensured that the owner has enough equity in their personal collateral, i.e. their home, for example, to repay the business loan. And that's why they're able to offer, very inexpensive business loan financing. One of the advantages to a company like us, quite frankly, over a bank is banks can be reluctant to deal with businesses that are less than 3 years old. With our Flex Funds program, which is the program that ties in card sales, you only have to be in business and operational for 6 months. And with a loan or line of credit, it's only a minimum of 1 year. So that's a great advantage. So that's one of the requirements. Another requirement is the sales of your business have to be at least $100,000 a year. So we really deal with small to mid-sized businesses. Banks and other larger financial institutions may be a little more reluctant because it may not be worth their time to deal with small business owners, whereas we only require them to do 100,000. So that's kind of a low threshold. They have to be a Canadian business. This division of OnDeck, although there is a US division and an Australian division, this division only deals with Canadian businesses. And credit has to be, at least 500 personal credit and business credit, 1,300. Business owners, they'll go to a bank, but Canadian banks are very conservative by nature, and so are credit unions. So very, very often, they'll go, and if they need $50,000, they may get approved for $30,000, in which case they'll need to source the remaining $20,000 they need or want for their project from an alternative lender like us. So the reality is we don't pretend to be everything to everybody. Very often we're catering with business owners that are combining our financing with financing from Royal Bank or BMO or Scotia, or maybe the BDC. And that's the reality of the situation. So, it's also probably not safe for anybody to put all their eggs in one basket. And so that phrase can be used in very many different scenarios. Small business owners, it's important to have, I think, more than one provider, and we hope to be one of the two providers or more that you're using. So you want to make sure you're not borrowing too much and your business can afford to pay back the financing providers, but ultimately decide you want short-term financing, long-term financing. And if you're looking for short-term financing and land on an OnDeck, then we have 3 programs that may meet your need or want. So that's kind of us with our 3 programs, but more importantly, us when you're thinking about it in the broader scale combined with maybe somebody else.